Good day, traders. I trust you're well. I thought today we'd have a look at OZN. As usual, I have removed indicators. Well, I don't trade with any indicators at all. I have just removed EMAs, right? So all the other things, RSI, stochastic market, beautiful stuff, but I don't use that. I only have EMAs on my charts, but I've taken them out because I know we all have different decision-making processes around EMAs. So let's get that out of the way. So OZN, this is the 15-minute chart on the 30th of June. Of course, as you're going through the day, things are unfolding before you. So you've got to be pretty active, as the day unfolds, right? You don't just sit there and do nothing. So as you're going through from the first candle, bulls try to break out, pretty weak breakout, no follow through, so nothing for us to do there. We have a doji, we're coming back, to the low of the day. That first candle of the day on currencies, commodities, I usually just ignore. The market is doing what it does as things adjust, as we shift over on MT4. But, we start to move on from there. Good low, good high, and open the bulls break above, give us a chance to buy. Nothing happens. Failed breakout. So at that point, we have this low, that high low, that high, and we have that high. So do we have a channel forming at that point in the day? Who knows? So you got to put it in, right? Remember, we're looking after everything is done. But as you're going through, you got to put it in, so that if the market bounces off and gives you a decent enough entry and you want to trade from here to there, if there is enough distance for you, you do that. But on the currencies, that is 20 pips. That's not enough for me to be looking to trade. I mean, the distance between the high and low is 20 pips. Even if I take a trade here, the chance of me making 20 pips doesn't exist, right? Because it's only a 20 pip range. So probably best to wait and see what comes our way. So bears break out, distant enough candle breaking out beneath that low, second candle. After that candle tested the low and we have a follow through. So if you want to jump in and start to trade, I would probably be doing that. This is Asian session. Doesn't matter what time it is really, because market's going to keep doing what it does at any given time. There is a low that we're considering. There is a high. So if I'm taking that trade, and I've got at least, a decent enough opportunity to manage trade. But if you want to jump in and sell, selling beneath here, stop is above here. Now, remember, guys, some guys are scalpers. When I am presenting my broadcast, I'm looking for swing trades. Trying to get 1 to 1, 2 to 1, 3 to 1. Not just going to scalp for 10 pips, whatever. But if you want to do that, if you're a scalper, use tight stops, and you've got to be quick enough to put your take profit within there. I prefer to take the trade, manage it, and hopefully we get a little bit more. If you start to go sideways and just tighten your stop, at some point you'd get stopped out. Probably somewhere within here you get stopped out because of spreads and whatever. But if it held you stop a little bit higher, maybe not. But when you see that kind of candle, you gotta decide. Remember, you always gotta be active in the market. So the market is going sideways. Here we're hoping for bears to accelerate. They don't get this low. That becomes a low of the day, low of Asian session with a high. So we are going sideways. Question, of course, is, are we going to stay sideways or are we going to have a breakout below? So we have a breakout beneath that. What I put there, I didn't explain to you. Measured moves, the height of that trading range. The bears would like to get to test that and maybe accelerate even lower with a different measured move. But here we ended up at the exact measured move. Now we have a tight trading range. We break and out beneath it. How far could we go? We hit it. Well, it's not a surprise. This is what you call the final pullback. After that bear breakout, we went sideways and we got to that measured move. So if you're still in the trade, then you must get out. If you're not in the trade and you see that, don't get fooled and suckered in to the punch thinking, oh, we're starting a brand new trend. You would think that if you don't have measured moves, right, you always got to put those measured moves there. So I talk about that a lot in the course. It's a tool, price action tool that I use quite frequently. Also could have thought quite legitimately. There is a bear breakout, first leg, right, which ended there. And you're saying to yourself, well, there's the first leg. If the bears accelerate down from here, we might go to a measured move. So you could have sold there, breakout, pull back, low one, aiming to go there, use a stop. You can't put a stop. Well, we're not scalping, so we're not putting stop above here. Probably use a measured move stop, maybe stop above here. And it starts to go sideways, tighten your stop, it gets stopped out. But you were hoping to get down here. Eventually, the bears tried, but they were restricted by the magnetic pull. I like to think of it in those terms. It helps me to think the magnetic forces controlling the trading range. That's where we go to. So don't take that trade, guys. If you didn't put that in, you took the trade, you see the failure. Don't pray and hope. Just get out of it. It was a bad decision. You get out, take a little bit of a loss. You wouldn't have put your stop there, probably have put your stop above you. Even if you put it there, you're not losing much if you got in and get out there. But when you make a mistake or the market suddenly changes direction, does something, just get out. Don't hang around and hope for things to happen. If you're fast enough, if you see all of this and you want to take that trade, I could take that trade. I would put the stop beneath here, leg one, leg two, or also consider putting a stop beneath the measured move of that. That's what I would do. I would never put a tight stop. Put it there. And as soon as it starts to move, manage your trade. You're aiming to get there to the top of that range, which you did, and then you get out. As soon as it starts to fail, you get out. But you're aiming for that, so just trade your stop up. Now, the bulls obviously want to keep going higher and higher and test the present high of the day, but the market comes back to test that level, breakout level. So not a surprise, that happens quite often. And you get a micro double bottom here, high, low, micro double bottom, 1, 2. When you see that, you can jump into here because now you are trading the much larger pattern. We've tested that, we're coming back. Who knows, we might want to be able to go and test. The other levels I didn't put in, just so that we stay focused on the actual price action, which would change our decision making, is if we had put in the highs of yesterday, lows of yesterday. But now we're just focusing on what's actually unfolding. So bear that in mind. So we're trying to aim for that. Me taking that trade, that's already been tested. But of course, the bears can come back and say 1, 2, 3 wedge. Accelerate failed, maybe there'll be another opportunity to sell. So if you take that trade, put your stop here, or you can use stop beneath this low and just tighten the stop and be aware. If the bear start to accelerate, get out of the trade. But you're rewarded and the market goes up a little bit higher. You could have taken that trade as well, but if you're taking that trade again, because of the way that you trade, I would first be looking for a measured move. And then when I put that in, I can see, okay, there's a key level on the left. So I'll just put my stop here. There's no need to put a tighter stop. You get rewarded if you go. If not, you manage your trade. So that would have been another beautiful trade opportunity. And then we don't know what's going to happen. We trade that. We don't know what's going to happen up here. So you manage your trade. If it starts to turn, you exit. If not, you stay in the trade. You get a breakout. Now, this is a beauty. We get a breakout above the high of Asian session high of today. Beautiful breakout. Bears try to fail it. Don't get suckered into selling, just like don't get suckered into selling everything. Oh, the bears are strong. Let me sell. Wait for more information. If the bears are strong, there will be a follow-through candle. Then we can consider selling, right? But that is a pullback. It's a test of that breakout. Let's see what happens next candle. We get that. So, you can buy that or wait a little bit more. Set to go up a little bit higher. Buy that, stop here, and just depend on your trade. This is now American session. This is London session, Asian session. Well, let's see. So that big bear candle there that we got was at the open of the London session, and there was the open of the US session. So trading, my friends, out of Asia, good opportunities for you. Trading London, good opportunities for you. Trading US, you come in here, you got to watch and wait for that breakout. Good opportunity you can, pick up a few points as the day unfolds. All right, guys, name is George Nyabadza. Post any questions you have in the chat and I will get back to you. Trust you enjoying the price action trading. I look forward to interacting with you again in the near future. All right, guys, take care. Name is George Nyabadza. We'll see you again. Bye-bye.